documentation do I need to get it forgiven for 2020? What I'm going to use is I'm going to use my owner compensation replacement for 2019. Over 8 weeks, that's going to be $15,835. My employee payroll cost, I'll take the 60, divide it by 52, multiply that by 8. I'll take the 36, divide it by 52, and multiply that by 8. I don't have any idea what these numbers come out to be. So add those up, and let's assume that that is 10. I'm just making up numbers. That's 10. This is 6,000. I'll add up these numbers. 15,000, so that's 16. I'll come up with 31,835. 31,835. I'll divide that by 0.75. And that will give me the amount of Paycheck Protection loan that can be forgiven. So if I got 40, if I got $40,000 initially, this might come up to $38,000. I'm just using round numbers. What's that mean? Well, I got 40. 38,000 is the max, 75% of 38 is 31,835. I'm making that assumption. That's the max amount of loan that you're going to have forgiven. What does that mean? Unless you hired somebody by June 30th and paid them, or the end of the 8 weeks, you paid them at least $2,000 bucks, you're going to have to give the money back. And that's my dilemma right now. So I'm thinking about going out and hiring somebody for a part-time basis and paying them some money. So I have to give the money back. But I'll probably just give the money back. But you kind of think about that. That's what all you have to do. Now, mortgage interest payments. I got to come up. So that's 75% of the loan amount. I've got to come up with approximately another $6,000 or $7,000 on mortgage interest payments. They mean rent on your mortgage. They also mean the interest that you pay on any personal property that you acquired. Business rent payment, business equipment. What about my rent on my copier? That's rent. Business utility payments, cost of electricity, warehouse, rents, gas, whatever. Driving your business vehicle also includes internet and phone. And then you go back to reimbursing an employee for their cell phone pursuant to an accountable plan. I don't know if you take that into account. It seems to me that you probably might be able to. But if you need another, if you can't come up with another $7,000, you shouldn't have applied for the loan in the first place. And it says that if you didn't claim the item as an expense on your 2019 return, you can't deduct it on your 2020 return as an amount paid. Interest on real and personal property, and then this stuff. At least 75% must be used for payroll cost. And that's my owner compensation replacement, or owner replacement compensation. Whatever it is. I think it's owner compensation replacement. Replacement compensation. I think I screwed up there. But you kind of see what I'm saying. Self-employed, it's my income for 2019. And I don't have to do anything for 2020. My payroll costs to my employees, I've got to add in. So owner compensation replacement. So I screwed up that other one. So hopefully that gives you an idea. Owner compensation replacement for 2020 is based on your net income for the prior year. Same thing with a partner in a partnership. It's the income that you reported as SC income. Okay, lease payments, yes, on the internet. 941 health insurance pension amounts. And then, tell you what this one was about. We're almost finished with this. Angela. Email from SBA stated that if you received an EIE, an economic injury disaster loan, it needs to be subtracted from the Paycheck Protection Program forgiveness. Now, did they call it an advance or did they call it a grant? And if you received an this is me. If you received, it needs to be subtracted from the Paycheck Protection Program forgiveness. So if you received a $20,000 in Paycheck Protection Program and a $1,000 EIL, Economic Injury Disaster Grant, I don't know what they mean by grant. Is that in advance? Is that the same thing as a grant? It says it needs to be subtracted. And that is not my understanding. And if you looked at that step 4, that's the only place I can find it. It says you subtract out the difference between the two. And you can't have a difference of a negative number. So I would say that is not correct. So, but this is like a moving target. They're making up new rules as they go along. And what they do, if you went through in that reference material, just do a Google search, or not a Google, Control F search. Look for advance, look for a grant. They define those a little bit differently. A grant, I think, is a regular economic injury disaster loan. And then an advance, the way I understand it, is something different. So I would say that is not correct. And it's all a matter of semantics. Question. Since included in the max, tips paid considered a payroll cost for purposes. Since included in the max loan calculation, then are tips included in the forgiveness calculation? The answer to that is yes. Problem is, what tips are they going to receive that are being reported now in that 8-week period of time? And we're really talking about bars, restaurants, kind of service. If they report them to you, you're still paying somebody in takeout. They would be taken into account as a payroll cost. Is it advisable to return the entire $1.1 million Paycheck Protection Program proceeds in the following situation? C Corporation, annual sales, $20 million. 125 employees currently operating at 40 to 50% capacity. Prior to receiving the $1.1 million in early April, taxpayer had approximately $1 million in cash and $1.5 million line of credit. Taxpayer is an essential business manufacturer. Yeah, but if their business is down 40 to 50%, did they cut employees? If they kept everybody as a full-time employee on payroll, I'd take the entire $1.1 million. And do I have to use my line of credit? I'd say no. I'd cash in the bank of $1 million. Well, question now is, if they've been meeting payroll, do they still have cash in the bank of $1 million? And will they have that cash in the bank 3 months from now if business is down? And that's all you can do. Is you're not going to be the determining factor. You're not going to make the decision. It's going to have to be the owner of the business that makes the decision. If owner has a conscience, say, I want to avoid any public scrutiny, I want to do the right thing, you might say, well, I've got enough cash to last me through how long? Maybe June 30th, maybe July 31st. But if things go on like they are, you're still down 40, 50%. What's going to happen come August? That's your determination, owner's determination. I'd probably tell them keep the money. Because I can definitely show that there's a reduction in my sales. Not a publicly held, I can't go out and issue stock to raise $1 million. Now, has there been any guidance as to what costs are eligible for forgiveness? As car insurance, car leases, home utilities, etc. What you're talking about is the sole proprietor who operates their business out of their house. Okay, that's great. Now, question is, the lease on an automobile, that's like renting a personal piece of equipment. How much did you deduct on your 2019 Schedule C? And how much are you going to pay in the 8 weeks following? Same with regards to the home office deduction. That's where you get back to paid or incurred. And you could also get into, if I took it last year, I took utilities last year, I'd probably say this is the amount that is allocable to that 8-week period of time for this year. And I don't know what kind of documentation they're going to require. My car insurance payments or car lease payments, and are you using the standard mileage or are you using actual costs? Sounds like you're going to use actual costs. So your actual insurance that's allocable to that month. And that's what the question to this really is. It's how do I, on the forgiveness side, if I've got these expenses, how do I show that they were paid in an 8-week period of time? This goes to incurred, and actually it says on the 8-week period of time, it says what was incurred and paid in that 8 weeks. And what happens if I've got a payroll on the last day of every month? And somebody received their Paycheck Protection Program on May, I think I went to 12. If I got the loan on the 12th starts today, and maybe I only pay payroll once a month. This month, next month. How do I allocate it to the 8 weeks? And if you ran the numbers on that, this might take you up until July 3rd. Come to that in just a second. Now this one on slide 196. I'm a member of the board of directors. I'm a Schedule C person. Now, if I'm a member of the board of directors, do I need a Paycheck Protection Program loan? Doesn't seem that I need one. But this one, this is where they're talking out both sides of the hat. That's why I tell you, take the money and run. This one actually deals with a member of the board of directors for the lenders. They're saying if you're a member of the board of directors for the lenders, you're also eligible to apply for a Paycheck Protection Program loan. Now that is crazy. Do you think they need the money? And there's no conflict of interest. That's what this says. Please borrow the money. That's why I'd say, in one place you tell me to take the money, another place you're saying uncertainty as to whether or not you can get through. what do I want to say? The uncertainty of the economic future. They tell me to take the money here. Gaming revenues, I don't care about that. A marijuana business, medical marijuana, not eligible, because the SBA cannot make a loan to an illegal business, recognized as an illegal business, under federal law. So, now, coming back to slide 199. I got 4 employees. My average monthly compensation is $40,000. I get a Paycheck Protection Program loan for $100,000. I lay off 3 employees. And what I do, I go out, it's me first. I pay myself $75,000 in 8 weeks. How much of my Paycheck Protection Program loan will be forgiven? I can tell you right now, there's people that did this, and they thought all they had to do was meet the 75% test, and the entire amount of the loan will be forgiven. I'll get rid of my employees, tell them to collect unemployment, and when I need them in the future, either they or somebody else will replace them. Question is, how much of this loan will be forgiven? Well, the maximum amount that you can pay yourself in 8 weeks is $100,000 divided by 52, which is $1,923, times 8, rounding up, which is $15,385. Divide that by 75. So you got 100. The maximum amount that can be forgiven is $20,513. That number is the max. It can go down if you reduce the employees or if you reduce somebody's salary by more than 37.5%. So if I stood fast here, I got a $100,000 loan, and only $5,000 will eventually be forgiven. Now, covered period. Covered loan means Paycheck Protection Program loan. Covered period, 8-week period, beginning on the date of the origination. They changed that date of origination to date of disbursement. Covered rent. Lease in effect February 15th. Covered utilities. Gas, transportation. Water, telephone, internet access, which you had in place on February 15th. Expected forgiveness amount. Payroll cost. What's included in payroll cost? Pension, retirement, and state unemployment, head tax. Payment of interest. Payment of covered rent obligations. Covered utility payments. Your payroll costs have to be at least 75% of the Paycheck Protection Program loan for the rest of it to be forgiven. The amount may not exceed the principal. Now, and just making up numbers here, if I had a Paycheck Protection Program loan of 100, my 8-week payroll is 60. And payroll cost, divide that by 75, the maximum amount that you get to have forgiven is $80,000 that you're going to have to repay the other $20,000. And the $80,000 can only go down for reduction in employees and a reduction in wages. If my Paycheck Protection Program loan was 100, the 8-week payroll was 90. Divide that by 75. You get $120,000. What's the max amount that can be forgiven? The answer is is $100,000. The increased payroll, you've already maxed out. I don't need any other cost. the entire amount of the loan is forgiven. I can't forgive more than the amount that I borrowed. That's essentially what that says. Now, this is a reduction if there's a drop in the number of full-time employees. I'm going from 4 to 1 employees. And number of full-time employees that you had a year ago from February 15th to June 30th of 2019. Number of employees that I had on January 1st, 2019 to 2020. If that was 0 there, and that was 0 there, you have no reduction in number of employees. So you can't go from 1 to anything. If you just had yourself, or you were self-employed, didn't have any employees, there's no reduction. So on my facts, I'm going from 4 to 1. What this is saying is if I'm at 80, divide that 1 by 4, and I've reduced the 80 from 80 to 20. If I went to $20,000, $2,500, and I go from 4 to 1, what's the maximum amount of that 100 that's going to be forgiven? $5,000. That's the reduction in the number of employees. Last year or this year you can use as the measuring stick. Average number of full-time employees for each filing period. There's a reduction, what this works out to be. There's a reduction if somebody's wages are dropped by at least 37.5%, assuming that they still are a full-time employee. Full-time employee to me would be somebody that works 30 hours a week. So, and you take the total number of hours that somebody works divided by 30, and that's your full-time equivalent. So if you drop somebody's wages, there's another reduction. And then this one here, I call it the savings clause. And savings clause. How does the savings clause work? What this is doing is they give you a June 30th date here. If there was a reduction in your number of full-time, reduction in salary of 1 or more employees, that not later than June 30th, you eliminate the reduction in the number of full-time equivalent employees, or you restore their wages by no later than June 30th of 2020. Now, if I receive my Paycheck Protection loan on May 8th, the end of the 56th day, including May 8th as one day, is July 2nd. There's a cutoff of June 30th. How does the cutoff work? Nobody knows. And so if I went from 1 to 4, if I hire those employees, and I think what they'll probably say is they'll say the savings clause will apply on the later of June 30th or the last day of the 8-week period of time, because this is now going to slop over into July. And they thought they'd have everything done by June 30th. So they're working out the details as we go along. And so that's probably, and there's nothing official on that. Right now it says June 30th. And they do say that if I cut my staff from 1 to 4, and the staff that I cut, the 3 people, 2 of the 3 come back, the other one says, you're a bum, I don't want to work for you. You still have to rehire another person by June 30th, to restore the reduction in wages. But what they say in the SBA, that please send us a copy of the offer letter that you made to the person that refused to come back. Because what we'd like to do is send that to the local unemployment, state unemployment, so that they can cut off their benefits. And I don't think anything will happen. And there's a number of people now that are collecting more on unemployment than they, with that other $600 than they were by working. So they didn't plan for this it's slopping over into July. They thought everything would be over by the end of June. So it's going to slop over, so they got to figure out what to do. Now this one, I've got a reduction in my wages that I paid, a reduction in my number of employees from 5 to 6. And the maximum amount of loan that I can forgive here is $80,000 based on my numbers. I borrowed 100. I went from 40,000 to 8 weeks, 60,000. 75% of 80 gives me 60. The $80,000 is reduced based on my numbers here to 5/6 of the 80,000. And that's over here. You can look at this. And it's reduced to about 67,000. And because I cut the pay of Chris by at least 37.5%, then there's another reduction which takes the 80,000 down to 65.5. And then the savings clause is if I hire another person by June 30th, or if I reinstore Chris's reduced salary, then there's no reduction for number of employees and no reduction for reduced wages. So that's all on that. So we did that, done that, and I'll answer these couple questions. How are full-time equivalent employees being calculated? I'm guessing, because they don't give me any guidance on this. But it goes back to 30 hours a week. And that's I'm going to say under the Affordable Care Act, they got that from the Family Medical and Leave Act. So it has to be 30 hours in a week. You know, does Target, Walmart, Sam's Club offer most of their employees any health insurance? Answer to that is no, because they restrict them to working 25 hours a week. You work 25 hours a week for Sam's Club, 25 hours a week for Target, and I'm not required to provide you with health insurance. So that's where the 30 hours a week comes from. I'm guessing they don't say it here. Richard, you got a question? Should an essential business manufacturer with normal annual sales volume of 3.6 million, now operating at approximately 40 to 50% capacity, while retaining their regular employees count of 16, return the Paycheck Protection Program loan proceeds received in early April. At the time of receiving the Paycheck Protection Program, the taxpayer had approximately $1.1 million in the bank. That is not for me to decide, not for you to decide. Would you tell a medical practice? Because I know a doc that got a practice that got $205,000. Same situation. Would you tell them to return their business? And I don't know what you mean by essential business. That could mean 100 different things. A doc is an essential business. And I know they're not going to return the money that they got. And it's kind of the same question. You're not going to find anything that's going to say yes or no. It's a real question, not for you. It's a real question for the owner. And tell them if they really want an answer, tell them to go out and get a legal opinion. And nobody's going to give you a legal opinion as to whether or not you have the economic uncertainty as to supporting yourself. You can't go out and issue shares of stock. And they're going to do this on a 20/20 hindsight. And again, as I said before, I'd probably keep the money. So they got $205,000. Kind of, for this, it's probably a substantial sum of money. And I don't know what their payroll is, but if they're keeping everybody on payroll and they didn't lay anybody off and they got a bunch of people sitting around, you know, God love them, because they could have just cut those 50% of their work personnel and said, hey, I can get through. But by the fact that they can show that their revenue is down, it's the other thing that you got to factor in here is they'll get their Paycheck Protection Program loan forgiven, but they're also not going to apply for the retention credit, because they could have applied for the retention credit and possibly have gotten, if they got in 16 employees, 160, they could have gotten $80,000 of free money under the retention credit, if not more. So my reaction is, I'll get some free money, but I'd keep the money. That's me, and it's not necessarily what you would do. So we did that, done that. Now we have to go on. I promised you a break, but I'm going to kind of lie to you. So if you have to step out, just go ahead and step out. But I want to cover the rest of this. And slide 220. And I think before we go on, most people are now going to ask, how much of my loan is going to be forgiven? And a lot of people are going to be surprised that because of the 75% test in the 52 weeks, unless they come up with some modification, that if you get within $5,000 or $6,000, we'll forgive the entire amount. Take everybody's salary, multiply it by 12, divide it by 52, multiply that by 8, with the maximum amount of $15,385 in cash. And that's your payroll cost. Factor in your retirement, your health insurance. The problem is, I don't know if you have to pay the retirement, or you have to, or make the retirement contribution, or have to pay the health insurance. If I pay health insurance premiums twice a year, July 1st, 12/31, how much of the health insurance cost for this 8-week period of time is taken into account? I don't know. Pension contribution. I don't make their pension contribution until I file the tax return. Do you allocate that on a per shareholder, or per employee per day basis? Seems to me that you should. But it says incurred and paid in the 8 weeks. And because I looked at that language yesterday. Now, let's go on. This is, they call it refundable rebate credit. Now they're calling it the stimulus credit. We want every American that's entitled to this $1,200 to get their money. That goes back to that dummy tax return, that Rev Proc 2020-28. How many people are going to scam the system? Lots. Dummy return. Somebody died in 2019, 2020. They got the rebate refund. What should I do with it? I'm divorced in 2019. I was divorced in 2018. And I have no 2019 return. So I had somebody ask me this. Since I didn't file my 2019 return, I was married in 2018, I got $2,400. What am I supposed to do with that when half of that belongs to my ex? On that one, you're going to reconcile in 2020 and repay $1,200. And then somebody yesterday told me they had a child claimed as a dependent who filed a tax return in 2018. They got their $1,200. What am I supposed to do with it? And then somebody else said their mom died and 2 years ago in 2018. and she received $1,200 for the mom. What am I supposed to do with it? My reaction to both of them is keep the money, and you'll reconcile for the child when the child files their 2020 tax return, and they will be obligated to repay it. There's not going to be any reconciliation for a deceased person. In Appendix Y, they came up with an FAQ on the stimulus payment and say in both of those, you should repay it. We did not mean to give this to somebody that was dead. You made the rules, and then, so I would tell you to probably repay it. And the problem with repaying it, everything is so screwed up right now. If it's the child that got the $1,200, I could repay it now, and they give you the address where you're supposed to send it, based on where you're located. But I can tell you, it's just going to sit in the mail, sit someplace, and it'll probably just screw up the system. On the child, I'd probably recommend waiting until 2020, tell them that you got the $1,200 and that you're now repaying the $1,200. Problem with that, though, is the parents or me will probably forget the child received the $1,200. And then the other one that somebody asked, this was actually somebody I'd do a return for. Child was under the age of 17 in 2018. They're 17 in 2019. When should I file my return? And I said, I told somebody, I'm going to hold off filing your 2019 return until you tell me that you got the $500 for your child in 2018. That sounds like I'm scamming the system. They have an FAQ on this, and they say, if that's the case, you can keep the money. Now, we get $1,200 for ourselves. Married person filing a joint return gets $2,400 plus a $500 credit for a qualifying child. As defined in 24C, that is the child tax credit. And this is code section 6428. So refundable credit is also available for those individuals whose only source of income, railroad, retirement benefits, Social Security, you don't have to do anything. If you're receiving VA disability, you don't have to do anything. If you want $500 for your child, generally you already reported that to the VA disability because your disability goes up based on number of dependents. But if that's the case, they said go on to the My File, whatever, and enter your information. They'll give you, and you actually had until last week to do it, so it's too late to do that. Credit is phased out by 5% of your AGI. 150, 112.5, and 75 for a single person. Completely phased out. They said at 198, 136.5, and $99,000. Well, it's not really that. If I'm married filing a joint return with 2 small children, my AGI is $150,000 or less. I get $2,400 for myself and my spouse, $500 for each child, $3,400. It's completely phased out at an AGI of $218,000. Take the 218, subtract out the 150, and multiply that 68,000 by 5%, you get $3,400. So for each child under the age of 17, it goes up by $10,000. Abby, a single person with no qualifying children, has an adjusted gross income of 85 on her 2019 return. If it's already filed, been processed, she's going to get $700. Well, when she files her 2020 tax return, and she's got an AGI of 75, you ask her whether or not she received a stimulus payment. She's going to say, what's that? Short memory, because she's already spent the money. You put in for $1,200. They're going to treat the $700 as a mathematical mistake. And they will give her a $500 amount. You're going to reconcile back to the number in 2020. So single AGI 2018, 70, 2019, 130. If I filed my 2019 return now, I wouldn't get it. If I filed my 2018 return, I get the $1,200. What happens if my 2020 AGI turns out to be $150,000? You don't have to repay it. And this stuff makes no sense. If I'm single, AGI 2019, 2018, of in excess of $100,000, I won't get it. So these are kind of the same. Won't get it, won't get it. But when I file my 2020 return, I will get it. So, and if I got it before, I'm not entitled to it now and I don't have to repay it. Not eligible. A non-resident alien. What about, and I'll show you why I do this. Somebody said you're infatuated with somebody that's incarcerated. I'll show you why. If I'm incarcerated, do I get the $1,200? And non-resident alien, you weren't supposed to get it. If you filed a 1040 NR, you won't get it. If you filed, however, a regular 1040, you probably got the $1,200. That's the mistake of the tax return preparer. Somebody said there was somebody from a foreign country working on, I think it's a J visa. I think that's supposed to go on a 1040 NR. Somebody put them on a regular 1040 and they got the $1,200. They're supposed to repay it. That's all I can tell you. Now this one, child age 21 in 2019, W-2, 18,000, full-time student claimed as a dependent. And you're going to tell me not eligible. If the child now is graduated in 2019, self-sufficient, not claimed as a dependent on parents' tax return. They've got an AGI of $75,000 or less in 2020. They will get their $1,200. And I've never seen people trying to crawl the woodwork as much as they had. Where's my free money? And they issued the rebate checks beginning April 13th. Paper checks supposedly April 30th, April 20th. You still have supposedly until tomorrow to go in and enter your information for direct deposit. And this just deals with when should an individual file, and we already did that. Most individuals will not have to do anything, but they have to have your account information for direct deposit. The IRS will send you a letter, and somebody brought me a copy of it, and it was on cheap paper. And what surprised me was the signature on the rebate. It was a letter signed by the president. So no comment on that one. So it is what it is. No credit will be allowed on or after December 31st, 2020. So if I file my 2020 return in 2021, will I still get the credit? Yeah, because it's based on your prior year's tax return for taxable year ending December 31st, 2020. It says that if the advance credit rebate received was greater than the credit which the taxpayer is not entitled to, you don't have to repay it. Now, one of the most recent ones that I got on this one was somebody sent me an email. Can I file now? My AGI is 150 or less. Get my $2,400 of stimulus payment. When I get my K-1 from my 1120S, I will file an amended return. It'll take my AGI up to 220, 250. Do I now have to repay the $2,400? Well, you don't need the money, but I want the money. And, well, I have to repay it. I would hope so. That's my reaction. I said, don't do that. That's borderline fraud. And that's in the same year, you got to have to repay it. If you're divorced or separated, it says each spouse is entitled to the $1,200. What I haven't figured out is this one. John filed his 2019 return. He takes his child as a dependent on his 2019 return. His AGI is $75,000. Will he get the $500 as well as the $2,000 child tax credit for his child? Answers, I know he gets child tax credit. Will he get the $500 for the child? I don't know. I'm going to guess yes. John and Susan, whether or not this is correct or not, I know it's incorrect. What they have done is they've agreed to alternate the dependency exemption. So John took him in 2019. Susan took the same child in 2018, has not filed her tax return. She filed as head of household in 2019 or in 2018. Her AGI in 2018 was 110. Did she also get $500 for the same child? And when you reconcile this in 2020, if John got the 500, Susan got the 500, which one of them is required to repay the $500? There's nothing out on that. So that's just one that I thought of. This is just an example as to when I should file. It says no credit will be allowed to an eligible individual who does not include an identification number for the taxpayer and spouse or qualifying child under the age of 17. And this code section makes a reference to 24H7. 24H7 says you need a work-eligible Social Security number. So if you got an ITIN number, you're not going to get the $1,200. But if you got a green card, you will get the $1,200. Work-eligible must be issued by the date of the return. If I got an ATIN number for a child that's under the process of being adopted under the age of 17, I get the $500. If you're a member of your military, only one spouse needs a work-eligible Social Security number. Does the tax return ask you whether or not you're a member of the military? Answer's no. Will it now ask you for 2020, were you a member of the military? And did you receive your $1,200, $2,400? You'll probably put down yes. I don't know what they'll ask as a verification. They will treat anything incorrect ID number as a math error. You got the $1,200, they'll take it away if it's not a valid ID number. You're going to reconcile everything back to 2020. This comes from the Joint Conference Committee report. If you receive less than, you reconcile in 2020 to get the proper amount. If you receive more than, you not have to pay it back. If you didn't get it for 18 or 19, you still got the chance to get it. Your AGI was too large or too high. You're still going to get it in 2020 if your AGI is 75, 150, or 112.5. And if somebody comes in, and this question we're going to ask, did you get the stimulus payment? What's that? The free money. I don't remember. You put down they're entitled to $1,200, $2,400. If they've already given it to them, they'll take it away. If they've already given you $500, they'll give you the other $700. And then this one over here. The credit amount is also available to a taxpayer who has an outstanding tax liability subject to lien levy. So you get the credit amount. Somebody asked me that question. They owe a bunch of money to the IRS. I got to do an offer in compromise form. And they will get the $1,200. Now, what if the individual is incarcerated? I think they're making up their own rules. In Appendix Y, question number 12, says if you're incarcerated, you're not entitled to the $1,200. I can't get there, but they got there. Now, will he or she be entitled? Technical answer is no. If they gave it to me, am I going to return it? Answer is no. Now, what I was thinking when I did this, where did the earned income tax credit fraud begin? They actually could trace it back to one prison. And as the prisoners were transferred, they could see the proliferation of the fraud with the earned income tax credit. This goes back more than 30, 35 years ago. Now, when we had the first-time homebuyer credit, how many individuals in 1 year who were incarcerated received the $7,500 or the $8,000? The answer to that is 20,000 prisoners received that first-time homebuyer credit, whatever that was called at the time, of which 2,000 were on death row. You think they repaid it? The answer is no. So but it does say if you're incarcerated, you're married. If your husband or wife is incarcerated, you're supposed to return the $1,200. My reaction is, catch me. And that's not the correct posture to take. But it is what it is. They're encouraging everybody to go out and get the money. We already did this, so I'm not going to redo it again. We'll do this one before we get too far afield. For the 8 weeks, it is gross wages earned during the gross week are paid during those 8 weeks. For example, an employer is paying payroll a few days after receiving the Paycheck Protection Program loan. But the payroll the employer is paying is for the 2 weeks prior to receiving the loan. Your guess, it says, incurred and paid. And you're going to have the same problem on the back end. What I think really should happen, and they got to come out with guidance on this, what I should do is allocate the wages to each employee on a per day basis. I should allocate my health insurance that I'm going to pay during that year on a per day or per employee per day basis. My pension contribution should also be as it's incurred. We need guidance on this. And I don't know what they're going to do on that. I can't tell you. It says incurred and paid in the statute, which would seem to me to say, well, you paid it now, but I can only take into account the payroll for the 3 days that's attributable to this payroll period. And I should be able to do the same thing on the back end. So, but they need to give us guidance on this as people begin to apply for the forgiveness. And so let's go back to where we left off. Now, this is an appendix WW. No 10% penalty for a premature distribution from a retirement plan if it's a coronavirus-related distribution. Also deals with plan loans. If it's coronavirus-related distribution. It's coronavirus-related distribution for somebody who's been diagnosed, whose spouse or dependent is diagnosed with the virus or the disease, or who experiences adverse consequences as a result of being furloughed, laid off, whatever. If it's a coronavirus-related distribution, you can take up to $100,000 as a premature distribution and not be subject to a 10% penalty tax for a premature distribution. So I pulled out $90,000 as a premature distribution from my IRA or pension contribution. I think it's coronavirus related. I'm not age 59 and a half. Am I going to be subject to a 10% penalty tax for a premature distribution? Answer to that is no. What you're going to do is self-certify to the plan administrator that this is a coronavirus-related distribution. Now, if I back up here, The plan administrator is going to send me a 1099-R. What's going to be the code on the 1099-R? Because I've got to worry about tap dancing my way around a 5329. Now, my question is this. If I certified to the plan administrator that this is a coronavirus-related distribution, is it going to be me or the plan administrator who makes that determination? To me, it should be the plan administrator. And what I'm wondering, I get a 1099-R for $90,000.